Good morning, traders. It is Friday, May 8th. Thank God it's Friday. We've got a nice market rally underway this morning, even on a horrific jobs number. 20.5 million jobs lost during the month of April. That's consistent with what we saw in the ADP report on Wednesday, where they said that 20.2 million jobs were lost in the private sector during the month of April. Really weak numbers. What does that mean for the market? Actually, it turned me pretty bullish when I saw the reaction to the ADP number on Wednesday and the fact that the market was able to shoulder that and move higher. I think the market still got some gas in the tank. Let's zoom out very quickly and take a look at the daily chart first. And here you can see the upward sloping trend line that I drew yesterday. And I'd mentioned to you that even though I believe that the market is going to roll over and that the recovery is going to take longer than expected, we cannot short the market until we have technical confirmation. We need that breakdown. And I referenced what happened here in February and how we needed to wait for that breakdown in March before we could get short, because here you're instantly stopped out and it looks like the market's going to continue to grind higher, making new all-time highs. It wasn't until we got a couple of consecutive long red bars closing on their low below major upward sloping trend lines, below major horizontal support, then we can start shorting. But to try and do it in here, you're going to take a lot of pain before you're right. And who knows? Maybe I'm wrong. Maybe the recovery is going to happen faster than I expect it to. There is some evidence in China that they're starting to get back on track. They had a really strong export number 2 days ago. It rose 3.5%. Expectations were for a 15% decline. So that is a big swing. And much of that was backlog orders that they had to fill. So they had those orders already in hand. Very easy for them to get the product manufactured, get it shipped out. The question is going to be what happens once that backlog is depleted. And we saw that their imports were down 14%. That was in line with expectations. So they're not importing a lot of raw materials, which makes you wonder if the demand will be there for their future products. So we'll have to keep an eye on that. So that was one piece of really good news that the market latched onto. The other thing that the market likes today is the fact that U.S.-China trade talks are okay. There was some squabbling going on about how China's not holding their end of the bargain up, but the two sides met and they've drafted a plan on how they can stick to the deal that was agreed upon last December. So that means that the Chinese are going to be buying U.S. agricultural products. We're seeing some of those stocks move higher. It's also been good for cyclical stocks today. So that's good news. We're also hearing from companies like McDonald's that even though the economy is gradually getting back on track, that consumption has been very sluggish. So that's consistent with what I believe is going to happen. Disney reopened its doors. Tickets were sold out immediately in Shanghai, and the government asked the theme park to only operate at 30% capacity. So even though it's great news that everybody's lined up and they want to go back to the park, it is only at 30% capacity. I doubt that the theme park can even make money at that level. But everything's starting to get back on track. We're seeing global economies start to reopen. So asset managers are erring on the side of being long because fixed income is producing negative real rates of return. Bond yields do not keep pace with inflation. So if you're invested in bonds, you're losing money every year. That forces money into the equity markets. And I believe that's what's happening right now. It's a wait and see attitude, but I think that asset managers feel that with the Fed printing money like mad, central banks printing money like mad, there's a safety net. There's $6 trillion worth of stimulus in the economy. So they feel that they need to be in the market right now. Let's see where everything plays out. And then if we see a slower recovery, then we can always hedge our positions and exit. Now, I'm speaking about how asset managers are approaching the market currently. And that's what's keeping a pretty decent bid to it. And when I see bad news like that ADP number come out on Wednesday, horrific number, and the market's able to shoulder that news, that's a bullish sign. So yesterday, I advised swing traders in my morning comments. I said, let's try and buy back our SPY short position. We were short at 287. We tried to buy it back at 287, missed that by a couple of pennies, and we were able to buy it back at the close, which those were the instructions. If we don't get filled, buy it back at the close, cover it. So we lost about 68 cents, nothing on our short position. We'd made more than 50 points earlier in the year, so we're still way up on our SPY trading. The point is that I think the market's going to try and challenge that 300 level. We're going to put up the major moving averages, and we'll take a look at where they come into play. And the 100-day and the 200-day are both converging right at 300. I think that's going to be formidable resistance, but I think we've got a shot to go up and test it as states start to reopen. As far as consumption and consumer patterns, there's going to be pent-up demand and backlogs for orders right now when everybody returns to work on the PPP stimulus program. So once those orders go through the system, is there going to be demand behind it? That is the big question, and it may take us 4 to 6 weeks to find out. So we can't be short right now. We'll be exposed to time decay, probably decreasing implied volatilities. Those will both be working against put buyers. So we need to be patient. We need to hold off. We can still focus on selling out of the money bullish put spreads here. We can also day trade from the long side, which we've been very successful at doing. So I'm going to shift gears and let's take a look at the two stocks that I showed you yesterday. And we were above SPY 288 yesterday. So I'd mentioned to you that one of the stocks that I liked for day trading and swing trading was Z. Z spells Zoom. Look at that stock go. Put up the 5-minute chart. And the video yesterday came out right here about 3 hours after trading. So we're probably at the $48 level. Folks, that stock is up to $56. That is an $8 winner since the video yesterday. It's about a 15% return on the underlying stock. I hope some of you took advantage of that. I also highlighted another stock, CRM, Sales Management. I'd mentioned to you that I love the fact that it was able to poke through this 100-day moving average. We weren't way higher, so we had a nice little entry point right in here. You can also see that that stock has done very well since the video came out yesterday. Stock was somewhere in this 170 level, and the stock right now is up to $174. So really nice winner. You can see really decent relative strength in that one today. So I'm going to follow up with a couple of other really good swing trades today. I think that you can be long into the close today. We'll take a look at the 5-minute chart. I spent so much time on the market because market first, market first, market first. The market drives every decision. So you have to keep your eye on the ball here. Let's take a look at that 1OP indicator. It's all I use to trade the S&P 500. You can see how it had a bullish cross right here yesterday. It was telling us to be long. And then we had this climax here. It told us right in here that we needed to be careful. And this was the place to start taking profits on long positions. We had a bearish cross in here. And then it kind of flatlined for most of the day. But you can see that that was an excellent signal. And we saw heavy selling into the close. By the way, that was the third day of heavy selling into the close. There's one day. There's another day. If I go back one more day to take a look at the 5-minute chart, you'll see that we had heavy selling into the close back on Tuesday as well, right in there. So that has me wondering if we're going to see a similar pattern today. I don't know. The market's been able to put a nice rally together so far. So I'm going to be looking for a pullback to buy. This is a bullish trend day. You can see the upward sloping trend line here. And you can see how the market was able to get through that prior high. We had one little red bar in here. You can see that cross right there in the 1OP indicator. So right there, it's telling you, be careful. Didn't happen here. Didn't happen here. It happened here. And that's why we use this as a leading indicator to tell us when we need to be taking profits on our long positions. When we got this long red bar, bears would typically want to see a doji would be fine if it's the next bar, but then they'll want a red bar following that, and that would be a sign that there is continued selling pressure. This is what I call a bid check. There's a big sell order that came in, and they pounded all the bids to see if they could get something going on the downside since we're at a high, and then it didn't happen. And with each subsequent bar here, I'd mentioned to members in the chat room, I said, this is turning into a bullish divergence. What does that mean? That means that when the 1OP indicator is showing us that the market should be going down and it should be going down, and the market is not going down, it's flatlining, that tells me that buyers are in there and that on the next bullish cross, we're going to take off. That's exactly what happened. So made decent money here, made some nice money in here. Now we're flatlining. Probably not going to do a whole lot for the next hour or so. I will be looking for a pullback. If I do not get a pullback, I will not be getting long anything. I'm not going to buy a little breakout, a little breakout, a little breakout, a little breakout. I'm not playing that game because at any moment you could get a long red bar just like this, and then you're in trouble. I need to see a decline. As that market decline starts to form, then I'll be hitting my searches like relative strength 30, and I'll be looking for stocks that are treading water and actually moving higher as the market comes in. When the market bottoms out and I get a nice bullish 1OP cross like this later in the day, I'm going to try and buy some stocks and ride them into the close, being very cautious with the late action because I know that the last 3 days we've seen selling into the closing bell. So I want to make sure that that pattern is not repeating today. I think there's going to be one more opportunity to get long. I think that you can also stay long over the weekend. I've told you that I believe that the market is going to challenge that 300 level. The fact that we've shouldered negative news this week, that tells me that the bid is strong and that it really wants to challenge that 300 level. So let me show you a couple of stocks that I think you can buy. And the first one is CMG. You can see how CMG has had a decent day today. It rallied up, pulled back a bit. It's a volatile stock, but it's near the high of the day right now. And here's why I like it. On the daily chart, you can see this nice tight compression in here. You had your earnings gap higher, stock gaps higher. Sellers come in. They want to pound it a little bit, see if the bid is still there. As it starts to compress, eventually the buyers start increasing their bids because they want to be long. This is good news. So we have this horizontal breakout today, and the stock is currently on the high. I think it's going to easily be able to challenge the all-time high right there at 925. So I like this stock. I think this is a good one. You can sell it out of the money bullish put spread. That 800 strike is so far away. I think you'd have to go in and sell it right here around the 850 strike on the notion that this support from the gap is going to hold. It held before. It should continue to hold right now. So you can also sell an out of the money bullish put spread on that. For bullish put spreads, I would try and keep them as close as possible, 2 weeks out, maybe 3 weeks out at the most. But I think that CMG sets up well for that. Going to also highlight BYND. Been a very, very strong stock. I like it to day trade today. I've been in and out of this a couple times. I've made money on it. So you can see how the stock has this nice upward sloping trend line. Let's put up the SPY on a 5-minute basis. And you'll notice that I have two charts up. I have my SPY chart. At any time, I can toggle between the two charts if I want to look at them. But I never lose sight of what the market's doing and what my 1OP indicator is doing. Both of these pieces of the puzzle are critically important. And then I can compare. Look here, we've got a nice grind higher by BYND, and we've got the market flat. That is a sign of relative strength. When the market's not able to advance, this stock is creeping higher. I also like BYND on a D1 chart. If we go in, we can see this big breakout through the 200-day moving average. That was post earnings, closes on the high. Then we get not quite what I would call a doji, but most importantly, half of this long green candle holds, and the stock was able to hold all of those gains yesterday. Today, we get this nice, strong, long green candle closing on its high through major D1 horizontal resistance. BYND looks good. I believe this stock continues to move higher. Finally, I'm going to give you a nice cheap little stock that you can take a look at, and that is VG. Let me go back to BYND for a second because I want to show you a bullish put spread that you can sell. Now, on this stock, You've got these long tails under body. You've got the 200-day moving average right here. Got the stock at 133 roughly. I don't know how much we'll be able to get for that 112 strike. By the way, there's been a reduction in pork production, so that could weigh on meat overall. And so the theory here is that BYND is going to benefit from that because people will be trying to cook their vegetarian burgers and substitute it for very expensive meat this summer. It's very possible. They also posted good earnings numbers. So the stock has got excellent momentum. Let's see if we can get anything down around that 112 level. I'll bet you we've got to go out about 3 weeks to do that, though, which that's a little bit longer than I like to go out for my credit spreads right now. And let's see what the 112, 111 bullish put spread would trade for. I'd like to get 20 cents on a $1 bullish put spread, $1 between the strike prices. And you can see, well, based on this, that's attainable. So you see it's 15-cent bid offered at 57 cents. Seems very, very pricey. So if I can get my 20 cents, which I think is very likely in here, that's not a bad bullish put spread to do. Now the stock is volatile. Let's actually take a look because you can see the 200-day moving average is at 111 right here. And let's see where that'd be 2 standard deviations. That's a little too far out of the money. So let's leverage that. And there's 1 standard deviation comes in at 118. I know that from the red dotted line, but that's the 200-day moving average. So let's see if we can go below that. We'll just slide that over there and see what kind of credit we can get here. That credit is doable below the 200-day moving average. I think that's a pretty good one. We've got to go out 3 weeks, but you can see that bid is already there right now. So let's see if we can come in 1 more week and do something even closer using that same strike price. That would be ideal. So I'm going to close out May 22 and I'm going to go to May 15, which is just a little more than a week. Let's see what we've got. Boy, that'd be a nice credit spread. I am going to have to do this one myself. We lost the strike prices that would allow us to do something nice and tight, which is a bummer. So we're almost going to have to go out that extra week because this puts us at the 115 strike price. And if I sold those and bought those, I sold those and bought those, I'm going to get a credit. That's a 5-point spread. I would need to get $1 for that. Yep, that's not going to work. So we've got to go out to the May 15th expiration cycle, and then we can get a decent credit. And I like selling that. Excuse me, it's the May 22s. And I like selling that 111, 110. And we might even be able to go down to the 110 strike price. Let me confirm that 200-day moving average. Yeah, it's right around the $110 price level. So we got to go a little bit further out of the money. And that's okay, though, because I'd like to get a little bit further out. That's probably the spread that I would do. Try and do the 110, 109 for a 20-cent credit. I think that will be a much better trade to do. 110, 109, and to try and do that for a 20-cent credit. So there's a spread for you to do as well. And I'm going to end with a cheap little stock that's interesting. It's VG, Vonage. I like this compression here. And I like the fact that the stock has been able to rest on a 100-day moving average. You see that it posted earnings yesterday. It blew through that horizontal resistance. It's been able to hold the gains. It's grinding higher today, and it's testing that 200-day moving average. So what would I do in this case? You want the stock above the 200-day moving average. So I'm going to put a GTC right there. That'll draw a horizontal line across the top. If the stock gets above the high of the day today, I know that it's above the 200-day moving average. That would set it up for a nice buy. Let's take a look at the 5-minute chart and let's see how it's doing. Choppy little stock, but you can see the nice grind higher yesterday. Again, after that earnings report, there's nothing for us to do right now, but if the stock gets above that 200-day moving average in the next day, 3 days, the next week. I don't care. I'm going to get my GTC alert pop up, and then I'll know that the stock is worth taking a look at. And you can see right now I wouldn't be day trading it because the stock has been pulling back while the market is flat. That shows relative weakness. So let's go in and take a look at a couple of searches very quickly. Heavy buying is one of my favorites. We'll go into the daily chart. When you see stocks in this chart, excuse me, you know that they want to run LRCX through the 200-day moving average. Beautiful. BYND we looked at. TWLO has been crazy good. Had a lot of people trading it today. That's been on this list. So we're looking for massive volume spikes and crosses through horizontal resistance, and this search helps us find that. Here we've got another good looking trade in AYX. Earnings after the close holds the major moving averages, moving through horizontal resistance on its high of the day. AYX looks good. I am actually going to give you one more because I had mentioned to you that the exports from China were better than expected. We also have some optimism because of the sellout on Disney Shanghai. So it looks like their economy is trying to get back on track. The trade talks with the U.S., everything seems fine there. They're going to figure out a way to live up to their obligations. So Chinese stocks should have a bid. And I think that those would be a good place to be. BABA and the rest, I don't like the charts technically. This still doesn't tell me that you want to be in. It's nice that it bounced off the 200-day moving average and that it's trying to fill this gap, but it still has resistance at the 100-day moving average. But PDD is a Chinese stock that I like. And here you can see how it pulled back here. It's breaking through horizontal resistance, going to a new high. It's got earnings coming up in about 2 weeks. I think this is a nice play, though. We'll put up that 5-minute chart, and you can see how that stock has been grinding higher. PDD, I'm adding that to the list so that when I come in Monday, we're going to take a look at all 4 of these stocks. If you like this content, please give it a thumbs up. That lets me know that I'm doing something right. Also, make sure to sign up for the YouTube channel, subscribe to it, and turn on your notifications so that you never miss these videos. I promise I'm going to try and fill it with great trade ideas and a lot of education as well. Thank you. Have a great weekend. Look for a possible video Sunday night. I'll also be releasing my swing trading video this week that I posted Wednesday night on YouTube Saturday morning. So please watch for that. It'll have lots of good education. You'll see how I'm positioning myself based on my market bias. Again, thank you. Have a great weekend. We'll see you Monday. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.